Meantime, shares of Kohl's are jumping today as an activist investor pushes the company to explore a strategy shift. Leslie Picker has that story for us, Leslie, after they just recently made another deal with an activist investor.
Yeah, Sarah, a new activist investor in Kohl's, for those of you out there who feel like they've seen this movie before. This time, the name is Engine Capital, which is different than Engine Number One, the firm that took on Exxon earlier this year. Engine Capital's Arnaud Adler has about $400 million under management, and he says he owns about 1% of Kohl's. He's pushing CEO Michelle Glass to consider strategic alternatives, including separating the e-commerce business, as Saks is doing and Macy's is considering, and a potential sale of the company to private equity as another option for the company to consider. Kohl's recently reached an agreement with 4 other investors in April, adding 2 of their nominees to the board. That group, which owned just shy of 10% at the time, had been more focused on things like compensation, inventory management, monetizing real estate, etc. Engine Capital's Adler believes that Kohl's e-commerce business alone could fetch more than $12.5 billion as a standalone company, which was about 40% higher than where the enterprise value was trading on Friday. In response, Kohl says in a statement to CNBC, quote, "The Kohl's board and management team continuously examine all opportunities for maximizing shareholder value. Our strong performance this year demonstrates that our strategy is gaining traction and driving results." Certainly strong performance today with Kohl's shares up about 6%. Guys.
How did this become so popular? I remember when Saks did this, and it was under Hudson Bay, and we haven't seen the Saks.com actually IPO, which there are reports that it's coming, maybe next year. Leslie, why are investors so excited about this strategy?
Yeah, it is. You can actually point it all the way back to Saks and the valuation it expects to get from its IPO. That was a signal to investors that this could be a really, really lucrative transaction. If Saks can get $6 billion or believes, its bankers believe it can get $6 billion in this IPO, then what could a Macy's get? What could a Kohl's get? And that got kind of the wheels churning across Wall Street to look at various retailers to see where some low-hanging fruit might lie in this kind of e-commerce separation idea. Now, it's important to note, as you mentioned, Saks hasn't actually officially done this yet, so it is unclear exactly how much the market would be willing to pay, but at least early indications kind of got that ball rolling.